Today is February 19th and I want to discuss two items. First of all, the oscillator. We had a lot of questions about the oscillator, what it is, how we use it, what it shows, and I just want to give a short explanation. The oscillator is, and this you can forget again because my computer will do it for you, is the difference between two moving averages, a short-term moving average and a long-term moving average. And the total is a histogram like I show and on the quality oscillator. Now, I often show that if a market moves up and then it tests the highs or it makes a new highs, what the oscillator is doing. Because actually the oscillator is showing the strength that is one of the secrets below the market. So the price might go up, but the oscillator is getting weaker and weaker, which means there's less support to move the market higher. And if we get lower prices and the oscillator is not confirming, means it's less negative when we go lower. It means that it's not confirming the momentum on the downside. So this is why often we show if a price target is reached, what the oscillator is doing. To be very, very secure, actually, when the oscillator is not confirming, it's time to close positions. But since we have cycles and we have price targets, we combine everything. Now, while I'm talking about cycles, I just have to make this following observation. About a half year ago, we already mentioned that we think our rate of return is going to come from gold and silver and crude oil and these markets, because although cycles are down on the stock markets, the market refuses to sell off. We still have the situation that our trend line on Dow Jones has not been broken on the upside. And as you might remember, we sent out a couple of times a yearly channel dating back to the low in 2009 that shows that we're right at the top of the channel. So it's unreasonable for investors to take a long position over here. Now, it might give a feeling that we're missing trades because everybody is very enthusiastic, but really this system has been working for different firms. I started at Merrill Lynch, I had my own firm, I did all the work for Goldman Sachs, and we have to stay with what we know and not what we don't know. So that's why we continue to find nice returns in metals, crude, natural gas, and we have to stand aside until the situation in the stock markets will clear up.